Welcome back to Brashonomics. I am Ben Brashin, and you just heard Wes Jones talk about the timing of having people go through a short sale or selling a house at all. And most people who, unless you're going to, I suppose, a nursing home, or probably even if you're going to a nursing home, you're going to need a place to move to. Mm-hmm. And a lot of people don't think about that. They think about it as two very separate transactions. I'm going to sell a house, and then I'm going to buy a house. But there's a lot of that preparation. We say that preparation word a lot, but there's a lot of preparation you can do while you still own the house, while you still are a home seller, or even before you're a home seller, so that you can truly recognize and understand what your home buying or renting or retirement home options are. Ryan Leopold is back with us. Ryan, how are you?
I'm doing awesome, Ben. How you doing, buddy?
I'm good. I've been following your nutrition blog.
Oh, good. Yeah, it's been about a week now, huh?
Yeah, it's pretty exciting. If any of you guys out there are interested in mortgages and nutrition, Ryan Leopold is definitely, you're probably the only one, buddy.
It's been fun doing the blog. I love it.
So when people start getting, getting healthier, whether it's through nutrition or the raise of their values of their home a little bit, they're feeling better about life, about things, and they're maybe potentially thinking about buying that new home, but they still own another home. What are some of the things they should be considering?
The biggest thing is really having, like you said before, being prepared and having a plan in place. And I think whether it's, should I list my house? When should I list it? How should I stage it? How should I fix it up? All those things are part of a plan and part of a process. But I think having a mortgage strategy in place, if you're going to buy again, whether you're going to buy again right after you sell your current home or a couple months or a couple years down the road, I think it's important to have a plan, because things on the mortgage side change so much all the time that it's really crucial to have things be as smooth and uneventful as possible, is that you do meet with a lender and have that plan in place. Whether you're looking to sell your house first and buy your next house, or in a perfect world, if you could buy your next home first, then come back and sell your current property, that's a strategy that tends to work for most buyers, if it's possible.
If they qualify, because now you're talking about qualifying for two mortgages.
And again, that's where that plan comes into place, to see what they qualify for. Is that possible? And understand that that's a really ideal situation now, especially if you get a really great consultation up front and what kind of time frame in general, what your current home could sell for, because that's going to dictate how you're going to make that next offer.
And I think a lot of that, what you're saying, it comes down to understanding what your goal is. And not yours, but, as a home buyer. Mm-hmm. If your goal is to have a very low-stress move and you don't want to upset your kids because they're in school and young, then, knowing that house is there and you're not trying to move in a weekend and resituate, that might be a good goal for you. And then you figure out if the finances will support that. Isn't that kind of what it comes down to, is understanding what's important to the person before you make that decision?
I'm going to tell you right now, probably the biggest underrated thing that I personally see in real estate, I'm curious if Wes and Michael agree with this, is that ability to buy your next home and then come back and put your house on the market. I mean, I'm dealing with my dad right now. We moved him into an assisted living facility, and now we're going to go, he's all out. Now we can go and do a clean sweep of his house, get it cleaned up, and get it ready to be put on the market. And oh my gosh, the stress of just going through the move was hard enough. I couldn't imagine going through that process knowing that, I'm trying to sell my house and I don't know what I'm going to buy yet. That seems tough to me. Or I find something I love that I want to buy. Now I got to see if I can get that and go get my house in the market. So that combination of two things, if you can have a plan in place and know what that next step is going to be on the mortgage side, which is for most people a huge part of the process, I think it really is huge.
Well, and I think that may be one of the big deterrents from move-up buyers moving forward is, you have to think about it. It's not only your money, it's your family, it's where you come home from work and where you sleep at night. And now you're going to try to disrupt everything in a real choreographed way. But the underlying factor is really going to be, do the finances make sense?
It really is. And in the past, when I always say the past in the mortgage side, we say maybe pre-2007, 2006.
When you didn't have to prove your income.
It really was a lot easier, because that's
Because you didn't have to prove your income.
Because you can get creative with the financing on the way that you state your income to qualify for more mortgages and have more of a smoother transaction.
Sure.
So yes. But now that you really have to show every dollar coming in and every dollar going out, it's tough for people to qualify for 2 mortgages, or they don't know that they do qualify and they're just fearful of that fact of maybe having 2 mortgage payments. They may qualify, but they're fearful of, hey, what if my house doesn't sell? I buy my new house. Where's the down payment going to come from? I'm going to have 2 mortguges, and that's going to really hurt us financially.
A real stretch for people.
It really could, and it is for a lot of people. But for some people, coming in and having a plan in place, they realize how much easier it can be if they allow professionals like, on the real estate side and on the mortgage side, understand their objectives and create a plan to help them get from where they are to where they want to be as efficiently and smooth as possible.
So what would you say would maybe be the 3 things people need to think about when they are deciding on how they want to sell and buy from a financial perspective?
Yeah, for the first one is always going to be the down payment, because you're going to need to have down payment on the house that you're going to buy. But for a lot of people, that down payment is actually coming from the proceeds coming from the house they're going to sell.
The equity in the house
the house they have now. So that's the first one we have to address. And some people think that, I need to put 20, 30% down and all that equity is in my house. And sometimes when they come in, I say, okay, you don't have a lot of reserves or a lot of money saved up right now, but maybe we do a low down payment option like 5%. We have mortgage insurance associated with the loan. You're still going to get market interest rates for the most part. Have mortgage insurance, but only need 5% down. Now you come back and sell your house, take that equity, basically buy down your current loan balance to get rid of that mortgage insurance. So that's an option that can work for people. But down payment is a huge first step.
And what would you say would be second? And what is something people have to really be aware of?
Yeah, so I think the second one's going to be basic reserves, how much money they have in the bank as they're going through this process. Not only to cover maybe a 2 mortgage payments for a couple months, but also reserves to satisfy what the banks are going to want to see when you close on a mortgage. Banks want to know, especially if you're covering 2 mortgages, okay? Now you have 2 mortgage payments that they want to see money in the bank to support, hey, what if it doesn't sell in a couple months? Do you have the money to support that as you go through the process?
Yeah, I mean, I think that's a safety net, if nothing else as well. And the last thing, I guess, is just, can you afford it?
Absolutely. I mean, not only can you afford it from a personal financial position, but also from what the lenders are going to see. And those tend to be 2 different conversations. You may be able to afford it, but the lender still doesn't meet their normal debt-to-income guidelines. Or you meet normal debt-to-income guidelines, but what a lender looks for and what the reality is on your financial position may be different as well. Lender only asks for certain income documents and certain asset documents, or not asset, but liability documents. And most of the time, it's just what's on a credit report. So that could be just a car payment, minimum payments on credit cards, or minimum payments on student loans. They don't know other liabilities you have outside of that in some cases. So understanding cash flow from what the lender wants and what you're comfortable with is a key part of that planning process.
Yeah, well, Ryan, I think a lot of people out there are you're starting to consider the move if their equity has come back, and knowing how to do that with your finances, I think is a huge wall that people have to get through, because it's tough when you're working with your own money to understand, okay, well, this is going to go here for this amount of time, and then this will go here, and then when we sell the house, we'll pay down this loan, that's going to get rid of the mortgage insurance, and then boom, you're going to have it. Well, that's just not something people think about every day. It's good to have you and have those strategies available. Again, Ryan Leopold with Cobalt Mortgage. When we come back, we'll continue the conversation with everybody who's in studio. We'll be right back after this break.